If you are new to trading, I want you guys to take this test that I'm about to go through, and by the end of it, you'll know where you stand as a trader. If you need to start brushing up and continuing to learn, or you are down pat on what you've learned and it is time to hit the markets and start trading. This is not a trick test. This is something every beginner trader should be able to answer if they want to start trading live. The questions are going to go from being easy to a bit more difficult by the end of it. So as we go through it, I want you guys to score yourself out of 10. Be honest with yourself. This isn't for me, this is for you to understand if you need to learn more or you are ready to hit the markets. It is for your own personal gain. If you guys are new to the channel, welcome. I run through my trade breakdowns. I go through technical analysis. I also go through the psychology of trading, as that is something not a lot of traders actually talk about. And this is basically just to give back and help what I've learned over the years, because I would like to teach you guys how to think as a trader, not only what to trade. Let's jump into today's trading IQ test. So this test is going to be a beginner to intermediate level. Let's get into it. Now, question number one, basic, very easy. What trend is this market currently in? I'm going to give you 5 seconds to think about it. All right, so the correct answer for this is we are currently bullish, right? We are in a uptrend. And what signifies this is the higher highs and the higher lows that are made in this market structure. As you can see, we keep breaking above and continuing this trend and making these higher low areas. So that is essentially signaling that we are in this bullish uptrend and it is more preferable to be looking to go long. So how'd you go with that? Score yourself 1 out of 1 or 0 out of 1 so far. Now, question number 2. Which zone marked out is a supply zone? Okay, so we've got the different zones. We've got A, B, C, D. I'll give you 5 seconds to think about it. All right, so with this, the supply zone is number C. If you have a look at it, that is where price aggressively pushed down from, and that is why it is the supply zone. A is an imbalance or fair value gap. Price left a huge void where not a lot of price was filled within it. B is a demand zone. That's where you had price chop around and then we had that big push up. And D is just a swing low point, and you could also say that's a liquidity area where liquidity is resting. Question number 3. What is the best time to be trading? A, during news. B, whenever the markets are always free to trade. C, when your setup presents itself. And D, don't trade at all. This should be a quick one. And the answer is C, when your setup presents yourself. Yes, obviously the markets are always free to trade, but that does not mean you should be trading 24/7 on that, because sometimes your setup might not be there to trade and hence you're probably just gambling in the market at that time. So the best time to be trading is when your setup presents itself. That is when you want to be in the market. Obviously during news, you do hear a lot of people talking about trading during news, trying to catch these moves, but sometimes it's just a guess. You're gambling the direction. If you're already in a trade before news, that's a different story, but trying to trade off a news pump or dump, that is not the best way to be trading. That is more so luck than actually using an edge in the market. And obviously it can't be D because we're all here to trade. So that's out of the question. Now, question number 4. What does higher time frame bias mean? A, only trading on the 1-minute chart. B, using a larger time frame like the daily beforehand. C, avoiding charts with long wicks. D, trading based on news events only. I'll give you 5 seconds to have a think about this. Now, this answer is B. So what does high time frame bias basically mean? It is basically using the bigger picture. You want to start on the higher time frames because they have way more stronger bias on the market. Those areas will impact market movements way more than the lower time frame, and you want to get an idea first of the higher time frame analysis. Where is price? What is price doing? That will allow you to trade more effectively on the lower time frames. And as you can see, a 12-hour demand zone is going to be way more impactful than a 15-minute supply zone. You may be asking, why didn't I put demand zone? But the question is here is, in a demand zone, you want to be going long, right? In a supply zone, you want to short. So if we're in a 12-hour demand zone, but you've marked out a 15-minute supply zone where you'd want to go short, but on the high time frame, the big bias where we want to go long, can you see how it's a bit conflicting there? So you want to use both the higher time frame and the lower time frame in confluence together. Now, question number 5. What is a ranging market? A market that is strongly trending upward, a market with no clear direction, bouncing between support and resistance, a market that only moves during news events, a market with increasing volume. I'll give you 5 seconds for that. So again, the answer for this is B. Number A, that is a bullish uptrend. It's strongly trending upward, as it says. And C is obviously, that's just not really a market trend. It's just when the market is moving during the news, and market volume is completely different to having a trend. Clear answer here is B. As you can see, I didn't want to put it up for you guys to give you the answer for this diagram, but as you can see, we are in this range bound here. Price is just chopping in between this, and then we start getting movement. So that is a ranging market right there. And this is actually one of the hardest areas to be trading for a beginner, because there's just so much indecisiveness, right? There is no trend to be following. It's just choppy and unpredictable. So the best move in a ranging market is sometimes just don't trade at all. Now, that's 5 questions. How well are you guys doing out of 5 so far? If you're 5 out of 5, that's really good. If you have a couple of losses, that's all right. We do have a bit more questions to bump you back up, but this is going to start getting a bit more tricky if you're just getting into trading. Now, question number 6, a strategy that wins 80% of the time is always profitable. True or false? Right, I'll give you 5 seconds for this. Now, this is false, okay? Now, you may be asking, whoa, Ryan, I'm winning 80% of the time. How am I not profitable? I only lose 20%. This 80% win rate does not show you the full picture, guys. Do not get misled by people saying they have an 80% win rate, 100% win rate. It's bullshit. That does not give you the full picture of how they trade and what they're trading, okay? Because risk to reward matters as well. As a beginner, you need to understand that these markets are completely random. So to be winning at 80% in these markets, it's kind of tough because it's unpredictable, it's random. Imagine just randomly betting. Like if you were to flip a coin, what are the odds of you always getting what you wanted? It's not going to be 80%. It's random. You don't know. It can be 80% at times, but sometimes it'll be 10%. Sometimes it'll be 20%. Sometimes it'll be 50%. Sometimes it could be 100%. But you see how it fluctuates. It's not going to be constantly at that range of 80%, right? If you close a trade early and it's in its profits, like for this trade example, if we took this trade here and we just closed it around here, it's still a win. It's still a profitable trade. But imagine if you kept taking trades like that and that just stacks up and that adds your win rate higher. But overall, like you take big losses like this and this, which doesn't equal to, like, it's not even a one-to-one trade. Can you see how sometimes it doesn't match up? That's why not always having an 80% win rate means you're profitable. There's always a bigger picture you need to look at when it comes to that. Now, question number 7. In which chart is there greater liquidity resting? If you don't know what liquidity is, make sure you go check out my other video where I talk about what liquidity is in the market. Liquidity is something really big and it's a crucial element of trading that you do need to understand to help you get better at trading. But anyways, back to the question. Number 8, we have a 4-hour chart here. As you can see, we do have a bit of lows there. Then we have a 1-minute chart resting above here, a 4-hour chart, a swing low, and then a 1-hour chart like that. Maybe 5 seconds, have a think and lock in your answers. Now, this might trick some of you, but the answer is A over here. And you may be asking, whoa, what about this major swing low where a lot of people are stacking their stop losses? Well, in a range, price is chopping around for a while and have orders stacked on both sides. You have a lot of people stacking up orders, placing their stop loss right under there, and it's there for a while. So a lot of people are essentially putting in their orders. These ranging markets happen because there are a lot of orders happening at once, back and forth between buyers and sellers. So that means there's going to be more resting liquidity at these levels over here compared to a major swing low where price just quickly reacts off. Yes, there's still liquidity there, but this one was talking about where's the greater liquidity. And obviously a 4-hour chart is going to have more liquidity than a 15-minute or even a 1-minute chart. Way more liquidity on that higher time frame. Remember, we talked about that higher time frame price. That's where it comes back to here. Now, question number 8. In this trade setup, what confluences have been marked out? All right, I'll give you a bit longer for this to have a think about. So the answer for this question is number A. We have a supply zone, a liquidity zone, and bearish structure forming. Okay, this is not a major strategy or edge. I'm just quickly giving you guys to be able to identify on the markets. So if you got that correct, that is really good. So we do have this supply zone marked out over here. We do have this liquidity that got raided, and as you can see, price closed below it. Right, it collected that liquidity, it came into the supply zone, and as you can see, we're in a bit of a bearish trend. Now, question number 9. It's very similar to question 8, but a bit different. In this trade setup, what confluences have been marked out? I'll give you a bit more longer for this question. Now, the correct answer for this one is D. You have an imbalance zone or fair value gap, you have a liquidity level, and you have bullish structure. As you can see, we are in this imbalance zone here where price left a bit of a void, right? It left that imbalance between the buyers and sellers. If it was a demand zone, it would be more down over here. That's where price would have come and reacted off, but we did not have that. And as well, we did have, again, a liquidity raid over here. As you can see, this is more of a sweep and reclaim. Question 8 was more of a trap and reclaim, right? As you can see, we had price sweep into it, came nicely into that imbalance, and reclaimed above that level. And as well, we are in that bullish trend. Okay, yes, it would have been a bit tricky because we've only seen one continuation here and not so much further back, but that's where it comes more a bit more advanced level, as like you just want to look at the picture that's right in front of you and be able to come up with an answer of what you see on the markets. Now, question number 10. This is going to be a lot more harder because this is where you're going to have to decipher whether we are buying or selling at this level. The responsibility comes more on you. So this is going to be a tough one. Here we have a 30-minute chart and a 4-hour chart, right? They are showing the exact same trade premise. We are just using both time frames to understand if we're going to buy or sell. Obviously, when you trade, you'll use more time frames, but in this scenario, to make it a bit more tricky, I'm just restricting it to a 30-minute and a 4-hour. So I'll give you some time to think about it and we'll get back onto it. So the answer for this question is we are going to be buying at this level. Okay, I'm going to run through why exactly we would be looking to buy. If you got this correct and it aligns with my reasoning as well, guys, that is really good. That's something you guys should be really proud of. If you did choose sell, maybe take some notes. If you did something wrong, fix it. Okay, there's no harm in getting it wrong. It happens. It's just the understanding curve that you're at, and it's okay to get things wrong. Now, for this, let's start on the higher time frame. Okay, the 4-hour. What are we currently looking at? We're looking at a trend. We see a bullish trend, right? We see this continuation, right? If we mark it out, we see we have this continuation. Okay, clearly we didn't continue up here, but that is okay because this is still that leg, that retrace and pull back down. So that's that trend we're seeing. And the area of interest, we're currently sitting, if you have a look, in a demand zone, a 4-hour demand zone, right? That's where you see price aggressively pushed up. As you can see, we've taken out some liquidity here, right? We've had that sweep and reclaim of price. So that is a lot to signal that we're going to be looking to go buy. And we could have done this on the 4-hour chart. We didn't really need to go to the 30-minute. If you go into the 30-minute, that's where you can start seeing this nice reaction of price. And you'd essentially want to be going to look long, have your stop loss down here, and you want to target these highs up here. That's how essentially you'd want to trade this setup. So here comes the final results, guys. So if you did get a 9 to 10, that is a really good thing. You're at a solid foundation where you guys can essentially start hitting the charts and start trading. You are thinking exactly like a trader. 6 to 8, you pretty much got the basics there, right? You maybe got some of the hard questions wrong, but that's okay because you're still learning and that's fine. Maybe just polish it up a bit and then you'd be ready to go. 3 to 5, you've got some knowledge, but you're not there yet. You need more learning time, more screen time on the charts, understanding the dynamics and the technical analysis part. If it's 0 to 2, look, that's okay, guys. Everyone was there at some point. Maybe you're just completely new, you're starting out and you came across this video, don't be disheartened. This is just the learning curve to understand where you're at. If you need that extra help, make sure you follow this channel. I will help you guys out as much as I can with a trading analysis and also the psychology part of trading. Anyways, I hope you guys enjoyed today's video. If you do want more like this, please leave a like and a comment, and we can have more trading IQ tests at a more intermediate and also an advanced level. See you guys in the next video. Peace out.